Hi everyone and welcome to Beyond Tomorrow, a new series from the New Zealand Herald in partnership with MYOB, where we tackle the unprecedented business environment affecting thousands of small and medium-sized enterprises right across New Zealand as the world battles to slow the spread of the novel coronavirus. I'm Will Trafford and every day I'm joined by Ingrid Cronin-Knight, MYOB's country manager, and today we have Scott Mason, managing partner at Findex, a financial advisory and accounting company, and that is all because we are talking tax. The government stimulus, the latest changes to the tax system, and how SMEs can access the support they need to keep on trading. Ingrid, understanding some of these government moves could potentially make or break a small and medium business, right?
Yeah, absolutely. I think that we're facing them making smart decisions around how they navigate their way through the current cash flow crisis, as I would call it. And we'll be looking at employment and wages, but tax is another big bill that they get hit with every year. I remember I was talking to the Minister of Finance, and he actually said it was our tax system was crowdsourcing and crowdfunding at its best. But what this is really about is they've announced some particular changes, and what I'm really keen for us to unpick is what that means for all of our small business owners and medium-sized business owners, and what they can count on as they navigate this cash flow crisis, as they make their choices about what they invest in, what they expense. And then what does the wage subsidy really mean from a PAYE perspective? Those kind of things is what we want to get under today.
Yeah, makes sense. Hey, Scott, give us a score for the government if you can, perhaps out of 10, as to how well they're managing this crisis and the stuff they're kind of doing to help small and medium-sized enterprises out.
I probably would give them an 8, to be honest. I think that they've learned as they've gone. None of us were particularly prepared for this. And they have also responded. So when the wage subsidy was released, it certainly favoured established businesses and not growth businesses. And when a number of people got quite heavily sort of involved in saying to MB and the government, hey, you've left a sector of society out here, or the business society out here, they responded by changing some of the definitions. So I think it was hard to get started. They did it quickly, they've done their best, and they continue to evolve it. I think the evolution itself causes some challenges, because it means that you've got businesses that are effectively making declarations under different rules, and that can get quite complex when we start looking backwards.
Yeah, well, like you sort of alluded to, there's a bit of policy making on the hoof, and you can't really sort of blame them for that. I suppose it's just the situation that we're in. Let's go into workshop mode then, if we can, and let's talk about what you just spoke about then, the employment subsidy. This is sort of something that can shore up your business short term, right?
Yeah, look, and I think there's a lot of businesses that have probably put their hand up a little prematurely, and I think that's also going to be a bit of a challenge going forward, particularly when the Prime Minister announced the lockdown period and businesses had effectively 2 days to make some pretty big decisions. When we go into lockdown, do I keep my staff on 100% wage? Do I keep them on 80% wage? Can I use the wage subsidy? And there was a whole lot of activity at that sort of very compressed point of time that people may reflect on in a later stage and go, maybe I got a little bit wrong. Maybe I shouldn't have applied. I'm actually hoping the government will sort of recognise the good faith that most people went into this, and actually perhaps offer a period, an amnesty period perhaps, to say, hey, I got it wrong. The vast majority of people, if they did get it wrong, probably did it for the right reasons.
Ingrid, your sort of take on it? I guess a lot of companies are still sort of looking at it now, right? And it all depended, I suppose, on how long you thought this was all going to last.
Well, look, what we know with small to medium-sized businesses is that many of them sail pretty close to the wind, pretty close to the line, so they don't necessarily have the cash reserves in there. And what, when this first came out, it meant that they were looking at zero revenue, or very much compressed revenue. And so they were facing the, how do I pay my bills and how do I pay my staff? And I know many business owners really stay up at night worrying about that. And full compliments to the government. What was really great about what they did was they got the money into the hands of small business owners in a couple of days. And our analytics show that in any given day, up to 50% of the deposits going through our clients could have been from that particular wage subsidy.
Wow.
I guess the challenge is that you can only apply once, is my understanding. And so making sure you've got that at the right level is the challenge. And so as you navigate these choices around the cash flow subsidy, as Scott has said, and your choices around how many permanent employees do you have versus how many part-time employees you have, you want to have gotten that right.
Yeah, Scott, I mean, can you still get it if you didn't apply for it now, and maybe now you've decided you're going to make your moves in terms of who you're getting rid of and who you're keeping?
Yeah, look, we've got a number of clients that we're still working through the process and haven't applied yet because that wasn't quite right, or our forecasting, because it was a retrospective test or a prospective test. So you could look retrospectively at a certain month compared to last year, or you could predict a future month. And some of our clients haven't had that comfort they should apply just yet. Depending on their industry, the shutdown or the lockdown probably triggered it for a lot more, so they've now gone into it. But we still have some clients that have up to June to elect to go into it. The other choice that's quite challenging is which employees you nominate. And because you don't actually have to nominate all of your employees, and in fact, if you think there's a part of your business that you're inevitably going to have to close down in reality, then you probably shouldn't be nominating those employees, but you may nominate the core part of the business. So there are some complexities there for business owners to work through with advice.
One of the new big changes is obviously this provisional tax threshold going from 2.5K to 5K. Can you sort of explain the value potentially there if you are an SME?
Yeah, look, to be honest, of all the tax changes that they announced, it's part of the business package, that was probably the one that excited me least. It took a group of businesses that may previously have been in the provisional tax regime and taken them out. So they go from 4 tax payments a year to 1 tax payment a year. It saves some compliance. So don't get me wrong.
Small move though, right? To go from 5 to 2.5.
Yeah, but if you think about it in the context, that's a difference in income between 7.5 and 15 grand. Yeah. So yep. Absolutely, there's a number of businesses, particularly with lower profit this year, that may find that they could fit in that $2,500 difference. And it's a good thing. It's been something that the accountants have pushed for a long time because the threshold hasn't moved for a long time. But it was probably some of the other changes that I thought were more beneficial in terms of immediate impact.
So basically, Ingrid, I guess it means that if you're paying provisional tax, you just get to pay it all next year, right?
Yeah, I think there's a number of smaller organisations that will benefit from this particular change. When after they've paid themselves and their profit is a lot lower, and so that has given some breathing room as they solve some of the other cash flow challenges they've got around wages and rent.
One of the other big things that I guess a lot of people will be looking at as a sort of headline number when we all talk about the notion of sort of death and taxes, right, is this forgiveness of penalties and the interest on late payments for businesses that have been what the government's calling significantly adversely affected.
Yeah, and it's going to be interesting to see how that pans out in terms of an application process. So as in how it's applied rather than applying for it. So it's obviously relating to payments after the 14th of February. And it's really saying, look, if you couldn't make a payment, if you come and talk to us and then you catch up as soon as it's practical, then we'll remit the penalties. But the one thing that people have to remember when they get their statements from IID, those interests will still be there until you get to the end and then they remit. So, don't get stressed. You've had the conversation and you've had the approval, but it still hasn't happened.
Maybe you can talk us through this reintroduction of depreciation on commercial premises. This probably works for landlords and I guess anyone who's occupying their own sort of plant, that kind of thing, right?
What it is that the reintroduction of depreciation on non-residential buildings. So that last applied back in 2011 tax year. And was removed. It's been reintroduced from the 2021 tax year at 2% diminishing value or 1.5% straight line. The good thing about it is that they have thought about those buildings people have had for a long time. So you pick up where you left off in 2011 if it's an old building, or you can take a new building, add in all the costs you've put into the building since you've owned it, and that's your cost base. I think this is a big ticket item. I think this is a $500 million cost over 4 years. So, it's not something that they've done lightly. I think they had signalled that they were probably going to announce it in the budget, but it's good. to me, it's good signalling that post-lockdown, post-COVID, the world's going to carry on, and we want businesses to prosper. We want you to retain some cash within the confines of what the country needs to spend, and to invest in property and those sorts of things. So I think it's definitely a good thing.
I've got a question for you, Scott, actually. You said non-residential. So what we know in New Zealand is that the biggest industry we have is actually around property management, and it's many people that actually own residential buildings. And so I think there'll be a question out there around whether or not this applies to the people that have residential rental properties.
Yeah, so it doesn't apply to residential rental properties and won't apply to batches and things like that, even if you put them on Airbnb. But again, that's within the whole ethos that this government has had a major concern about residential rental or residential property as an investment since it's been in office. So that's pretty consistent with that concern.
One other one that I'm looking at here is the moving from $500 to $5,000 to claim the whole amount of an asset as an expense. This must be a massive one for SMEs, surely.
Look, absolutely. I think in some ways for a lot of our clients who are, tradies and the like, they see this as a massive win. The 5,000 is only in place for 12 months as an extra incentive. What I didn't appreciate on the day of the announcement is that it was effective from the 17th of March 2020 to 17th of March 2021. To be fair, to give it context, Australia has a $20,000 threshold. So, that's something they introduced, I think last year it was. So, contextually, 5,000 is fantastic. I have to say, ongoing 1,000 feels light, but hopefully we'll all get used to 5,000 and the government might just leave it in place.
That's the big key, Ingrid, back to 1,000 next year. So I guess it is a good way to sort of force that stimulus into the market when the lockdown lifts.
Yeah, I think this is a great move by the government, actually, because what we know is and what we want is cash flowing through the economy. And so here is a big ticket item, I think, that allows small businesses to actually claim that as an expense right now. And what it allows you to do as well in a low interest environment, if you do have the ability to project a positive business and you can get access to finances, to think about the investments that you could make that can help your business grow as well. So it's not we know that the lockdown hasn't impacted every business, but if you've got a diverse portfolio or cash reserves and a positive outlook, this is a great lever over this coming 12 months for you to be able to invest, make purchases that you might have wanted to do, but you would have then had to depreciate it over 3, 5, 7 years, whatever the rate was. This is a great way to stimulate cash flowing through the economy, and I'm really, really pleased to see it.
This next one is one that I've never heard of before, so you're going to have to explain this one to me. Pooling?
Tax pooling. So it goes back to the topic of provisional tax that we talked about before. So some people have been taken out of the provisional tax regime. Tax pooling is probably more applicable to those that have quite chunky amounts of tax to pay. And it's a mechanism through a tax pooling provider that allows you to spread your payments or control your provisional tax payments a little bit more conveniently than just the 4 set dates, 3 provisional dates and your terminal date. Tax pooling is a fantastic resource that hopefully, again, all accountants are talking to their clients about as a mechanism to manage that cash outflow, because as Ingrid said, cash is absolutely king right now, and managing every dollar of outflow is critical.
Scott, we just heard about the Inland Revenue provide some forgiveness on interest and penalties. Does that mean there's not the need to go into a tax pooling regime at the moment?
Yeah, that's a really good question, and one that we've been sort of debating a little bit internally. Again, there's a difference between a loose statement on a website that says, I think at one stage it said, don't worry about telling us, just pay us and we'll sort it out later. That's not how the rules work. And, you do need to go through some criteria to get the remission of use of money interest. I do think that tax pooling is a better way to actually control your cash flow. It's active decision making, and I think business is all about active decision making.
In terms of, as I think about small and medium business owners and them making choices around cash flow and what they put their money into, I reckon some of them might be thinking that this inland revenue forgiving interest and penalties might be a way to finance some activity and using essentially inland revenue as a bank. So what's your thoughts on that perspective? I'm not too sure that lots of people share that, but I do think that there'll be a few that will think of it like that.
I think it's the same thing that drove a lot of people to quickly apply for subsidies. Is that it's convenient, it seems easy, it's trust-based. And then what happened is people applied so quickly with so little rigour, then they started bringing in extra rules, and the declaration got 3 times longer and all those sorts of things. I think this will be similar. I think that if a few people do that, but the vast majority play with a straight bat, it's probably okay. If we have a tsunami of people just not paying their tax and not talking to revenue and not putting protocols or payment plans in place, then all of a sudden the natural consequence will be the rules will get tightened, the revenue will take a harder approach, the thresholds for proof will go up, and people will wish they'd used tax pooling.
I guess, is there anything that, as you think about the breadth of small and medium-sized businesses that are going through these different challenges, are there any areas where you think that they can, lean into to get the greatest benefit right now?
It is about cash flow. There's no question. And, to understand your cash flow, you need to understand your customers. You need to understand what they're going through and what the challenges they're having. You should be segmenting your client base or your customer base, working out which industries you think are going to be toughest hit within that, which ones will be less, and being active and talking to all of your customers, getting their cash in. Obviously, getting prepared to get back on the tools as lockdown comes off. And I know a lot of the conversations I've been having for the last 2 weeks have been less about wage subsidy and more around the practical consequences of what do we do on day one, what do we do on day two, what does our world look like post-lockdown, what size business should we have post-lockdown, what processes and consultation should we start be thinking about doing before we get out of lockdown, putting in place the payment and the processes and the collection processes, so that when we get out of lockdown, we're actually ready to do business. And all the economic theory I look at suggests that you have a little spike, and then we'll come down. We have a bit of pent up demand in a range of industries, and I can see that happening. But I think that generally businesses in most industries probably need to have a view that the world may not be quite as good as it was pre-COVID, and need to be planning for that.
Yeah, well, look, we would wholly support, small businesses getting an advisor of some sort, because they are in your court, as you mentioned. And I think that's, good advice is going to be really prudent as they make decisions in the coming weeks and months. And I think that I'm really excited. I know the Minister of Finance is going to make some announcements mid to late this week around how to cushion the blow even further. So I suspect that there'll be more to talk about as we go through both the budget and what relief they have planned.
One that I've got here is around instalments. If you're going to the IRD to talk about, maybe changing your sort of payments and that kind of thing, Scott, is it that best done by done collectively with your accountant, or is it something that you sort of discuss with your accountant, you do by yourself?
Whoever has the conversation with revenue, you need to do your homework, because what you're trying to do is put them in a position that they can approve it. And if you understand the rules that they operate under, the KPIs they operate under, then you want to go to them, you say, here's my cash flow, here's my plan for the short term, here's my plan for the long term, this is how I get myself out. So they're part of the solution. I think if you go to anyone with just problems, then you don't get the same sort of feedback as if you go with the solution.
I guess some of these businesses, Ingrid, will be the sort of businesses employed by government, be it local government or central government, right? There's obviously going to be stimulus into the market following the sort of rebound. As as Scott said, there might be pent-up demand as the lockdown's lifted, and then we might have a bit of a dip, presumably that government stimulus. If you're one of those businesses involved in roading and that kind of stuff, you might go and look to spend some money.
Yeah, look, I think that that we know that there are essential industries right now that if you're in the value chain of that, they'll be they won't have seen a blip in demand. In fact, they might be seeing some increased demand. So I think that if you can look at your business and you can invest in the areas or pivot to the client base that are in the industries that we're going to see growing, or sustained demand, then that's a good thing. Manufacturing's mixed, so it depends on what you're manufacturing. But tourism, as we know, and travel has taken a large hit. And so I do think they'll be looking to stimulate that domestically.
The most important point there, Ingrid, is actually reflecting and looking at your business and making active decisions as opposed to sitting there and letting it happen to you.
Mm-hmm. And there's a need for good decision making in a short time frame at the moment, and that's the challenge. And there's an uncertainty about what you can do in the lockdown. And I'm really pleased to see, as we go through the alert levels, the government has provided indication that this week they'll give some clarity about the activities that they see will be allowed, which I think will give more guidance to business owners to make smart decisions around.
Right. Well, I guess if you've been sort of, sailing it alone up until this point, and now you're obviously looking at all of these different changes, within the tax and that sort of system. Ingrid, where should you go and maybe start looking at, some support to bring them into your business to take advantage of some of the things the government's doing?
Well, usually, Chartered Accountants New Zealand, CPA, there's a range of organisations. Findex is a great one, which has got one of the biggest portfolios across Australia and New Zealand firms. And so I think if you reach out to your local partner, and if you're not getting the initial advice that you need from them because they're just purely focused on compliance, there are other organisations in the similar field that can give it to you, and there is a range of business mentors out there which are available either online through LinkedIn, virtually through the Chamber of Commerce, that will help support your business and give you advice. The
only other category I would say is your colleagues and associates in your industry. They're all, you don't have to share all details, but they're all going through some of the same challenges, and sometimes it just lifts the spirit to realise that you're not absolutely alone.
All right, Ingrid Cronin-Knight, MYOB's Country Manager, and Scott Mason, Managing Partner at Findex, the financial advisory and accounting company. Thanks so much for all the really helpful advice. Remember, we want your questions as well. Email them to video@nzherald.co.nz. I'm Will Trafford. Bye for now.